let's get right to it here. It's Wednesday, March 13th, 2024. It's Don Kaufman. You've got just about 3 minutes and 30 seconds to go to the cash open with absolutely nothing going on this morning. The S&Ps are, well, relatively massively unchanged. Now, there is actually some price action in the Nasdaq marketplace. So the Nasdaq, it's getting a little squirrely this morning, but what's 45 handles amongst friends when you're now an $18,433 product? Yeah, not like I'm counting, but I almost have trouble saying that the Nasdaq now is an $18,000 product. I remember back in the day when it was like 4,000, and that wasn't that long ago. Anyway, with that, and spin back around and actually look at the bond market. The bond market, a little bit of selling going on. The reason I'm looking at the bond market, there's some size in here. There's some size in the notes. Excuse me. 2 seconds into the trading day, not even into the trading day, and I'm all choked up. There was a little discontent with a bond auction yesterday. And it's interesting because you barely even see it here in the marketplace. There's a 30-year auction today that I think we should pay some attention to. It could actually be a market moving event. And again, I'm going to point it out to you literally up front because that 30-year bond auction, got to be careful. It's 10 a.m. That's 10 a.m. Pacific. So 1 p.m. Eastern time, there's a bond auction. I'd be a little careful today. There's nothing else really on the calendar. So we're going to be like, in the hands of Nvidia and this bond auction. That's all that stands between you and, the S&P is making a decent sized move. Nevertheless, there is some price action in the bond market this morning. Oil, big bid back to the upside. I say back to the upside. Oil actually backed off. Momentary lapse of reason. But again, oil coming up to the $80 handle once again. So what is likely to move markets? Well, it's the usual suspects. Obviously, Nvidia is worth paying attention to, not just because it's the most pivotal stock right now, but there is a little bit of price action in here late in yesterday's trading session. And I say late, like the last 20 minutes of the trading session, it exploded to the upside. But at the exact same time, when I say it exploded too, like you want to talk about moving a marketplace, there's your marketplace. The entire marketplace took off and maintained the rally because of that. It's a move from 905 to basically like 920. It's actually going to barf back that exact move. Nvidia opening at about 911. It is just about 8 to 10 handles lower than yesterday. Don't get too excited just yet though, because there's already some price action other places that are a little bit more positive. Nevertheless, you've also got a little bit of sell side activity inside of Meta. Those two have really driven markets. But Microsoft, it's another bid back to the upside. So we're going to come into the cash open here in just a couple of moments. It's a total slop fest here. Ticks are going to be scattered and broken. Advanced decline line scattered and broken. Let's let tech dictate this one. So here we are at the bells. I was seeing a bit of a slop fest. In the advanced decline line world, look at that big hit to the Nasdaq at the bell. In the advanced decline line world, you're like, this is extremely positive, except what you're seeing right now is a rotation out of some of the big tech stocks into, well, we're looking at just that right now. Energy is flying this morning. And that's all you really got. Bear with me here momentarily. I'm just looking at Microsoft. I'm a little surprised by some of the price action on the screen. I'm surprised because there's more movement in Microsoft right now than there is in Nvidia. So out of the gate this morning, tech's a little soft. Now, there's big discussions going on at present time amongst trading firms, most of Wall Street. There were comments made yesterday out of Jamie Dimon. There were comments made out of Ken Griffin, obviously the owner of Citadel, that they haven't just perplexed people, but it's the talk of the entire trading community. And I will discuss that here in just a few minutes. We'll let this thing kind of open up again. One interesting thing that you're seeing today, and again, I'm picking up on this right here, right now. We are seeing you're looking at this and you're like, oh, it's a positive advanced decline line. Yeah. And if you come over here to the charts with me for just a second, and we'll come over here to Quantix, not only is it a positive advanced decline line, but the ticks are positive as well. That's the New York Stock Exchange tick. Nevertheless, we have seen this lately where you've got this positive advanced decline line, you've got positive ticks, and the marketplace actually starts to progress a little bit to the downside. A bit of a catch-22 right now. And what you're seeing, by the way, there's Nvidia. What you're seeing right now is rotation, okay, away from tech. And if I haven't said this enough times, I'll say it again today. Nothing else really matters. Okay. I'm going to explain in quite some detail here in just the next few minutes why and how tech drives everything. Because I've received a few emails lately, and the emails kind of went along the lines are like, okay, I understand Nvidia. All right. I understand Nvidia can move markets because of its market cap. Okay. But Don, okay, this stock is hitting highs, and this stock is moving up, and this stock is moving up. Nvidia, okay, drives markets. Driving markets drives individual stocks. And I'm going to show you actually exactly how the trade proliferates, okay, almost like in a domino effect fashion throughout the entire marketplace. And we'll discuss that here in just a few minutes. One of the things, obviously, that we're looking at is a rotation right now to some degree away from Nvidia. By the way, 15 or 16 bucks. Okay, what's 15 or 16 bucks amongst friends? That's just giving back a very nominal amount of yesterday's gains. Speaking of yesterday's gains, let's talk briefly about the expected move. And it's not even so much that I'm interested in an expected move even here in Nvidia. What I'm interested in is price action and where the week actually started. So you have a little price bubble right here, okay, and that's 875. Okay, obviously that's shaded in the same color as, well, the start of the week. So shaded in black, 875. Okay, right here. That's where the week started. Okay, we're trading right now 903. So when you look at it and you're like, oh, it's selling off. Okay, yeah, today, but and it's pretty nominal sell off today. You have to gain some perspective on some of the price action in there. Until we got to 875, you're not even back to where we started on the week. Now, getting back to 875, you realize that's another 25 handle sell-off. The stock would actually be down close to 5%. That would really start to spark some fear in the marketplace. Moreover, if Nvidia comes back to 875, okay, how much of a move does that really impact the S&Ps? And that's usually more of a guesstimate than it is something definitive and accurate, but one aspect, and as if we do pull back basically to where we were yesterday, right? So on Monday of this week, we actually started down. Nvidia blows back to the upside, okay, pulling back a little bit today. And the reason I'm discussing a pullback in Nvidia, right? Not only would it have resonate and be felt in the S&Ps, well, I did my homework here, and the volatility once again in Nvidia, okay, hit absolutely catastrophic levels late in yesterday's trading session. So my little homework here is about to pay off a bit, and I'm just going to show you under equities. Let's get rid of volume. Okay, just bear with me for a second as I bring this up. One of the things that we saw yesterday in Nvidia, okay, is volatility. Okay, and again, this is specific time. Volatility went absolutely parabolic yesterday. Now, again, I want to reiterate, now, how important is this? Okay, it's everything. I mean, you're looking at the volatility, and this is going to be, record breaking here. You're looking at the volatility of one individual equity product. And the volatility that we're looking at, the volatility here that we're charting on thinkorswim, and I can't stress this enough, that's the 30-day vol. That's not even the short duration vol is far more wicked than this. There's a 30-day vol, but the 30-day vol is still very indicative of what's going on in terms of price action. When I say that it went parabolic, I mean, if you saw, first of all, if you saw VIX at these levels, like 64, you'd probably freak out. But what you have to actually understand is that volatility of the entire product is moving from 64%, okay, and a few minutes later, okay, is sitting at 68%. And that ain't normal. And here it goes again, okay? That ain't normal, that ain't healthy. That's when, as a trade, it doesn't work anymore. Now we're going to look at it on a 1-year basis. Okay. And the reason I'm looking at it at a 1-year basis, and again, it's just purely implied volatility. Forget about what you think, okay, about stock. It doesn't matter about share price. It doesn't matter. Okay. You can talk, about the valuation. Okay. I mean, the PE ratio. Okay. I can hear Bierman. It's in my head, man. Anyway, the valuation, the PE ratio, that crap matters. Why? You're seeing a product where implied volatility right now, okay, is above previous earnings announcements. Now, there's an earnings announcement back here where there was a little bit more volatility, but that's an earnings announcement. There's no earnings announcement. Next earnings announcement ain't till May, which is much more than that 30-day window out there. Nevertheless, okay, we have some of the highest implied volatility. In fact, I'm going to bring it up over 3 years. There is an instance right back here where there's this huge implied volatility spike, coming into an earnings. But you have to understand that this is share price going to the upside. If you look down here, okay, their share price actually tanking. The reason, again, I am spending so much time on this implied volatility, okay, well, it's very simple, okay? At some point, it ain't worth, okay? The juice is not worth the squeeze. And what happens is the trade that is moving markets starts to completely implode upon itself. And put buying then becomes more relevant, whereby they start buying puts. And it's completely backwards for the market. Most of the time when markets go down, implied volatility goes up. In the case of Nvidia, the market goes down, drives put buying, but put buying isn't fierce in here. So the implied volatility actually drops off. Okay. And again, it is absolutely ridiculous, okay, to even think about that logic. All right. So John was saying, why are you using study rather than looking at the actual options chain? So I look at the options chain, John. Okay. John was asking why I'm over here in a chart. Okay. The only reason I'm on the chart, to be honest, is to show you. It just doesn't do it justice when you're like looking at a 2-day and the vol is like 78. What it comes down to, though, is again, I talk about the logic of, is the juice, okay, worth the squeeze? And if you're not familiar with that terminology, will you get familiar with that terminology? No, if you're not familiar with that terminology, it basically means at some point, as implied volatility starts to go up, trade will look at this and go, the 925 calls, can you buy them for 1150? Sure you can, okay? But that might be sheer stupidity. And you go, well, why? Okay, you're going to pay $12 for something for 2 days? That's, what, $25 out of the money? Stock has to go to basically 35 and you barely break even at this point. Yeah, it has to go above that. Stock has to basically go almost to 940 and it's got to go up $40. It can totally do it. Okay, I'm not going to dispel that, but look, at some point they come in though and they look at these premiums because there's so much skew in here. Like the at the monies are trading for like 75, is 78, and they jump to like 84. At some point, everybody comes in and they go, this is ridiculous. Let's just start selling the options in here. And if you sell calls, selling calls will start to bleed through to the marketplace. So they've already started off on a negative note. And I picked up on this. And the reason I'm starting with it and spending 10 minutes this morning, I picked up on it last night when I looked at it and it was like, I was like, oh my gosh, I mean, almost a 70% implied volatility. And again, you're almost at a 70% implied volatility 30 days out. You're at 69% vol. Okay. And whatever, man, volatility. Okay. But you have to understand a 70% implied volatility of, one of the largest market caps on the street is we're hitting critical mass here. And it coincided, of course, with there are some very interesting warnings coming out from some very interesting people. Not that I necessarily listen to like Jamie Dimon, but you have to have concern when on one day, okay, on one day, both Jamie Dimon, and again, Jamie Dimon, this has nothing to do with Citi, but Jamie Dimon uh, sent a kind of a firm warning to the Fed. The firm warning was to the Fed was, yeah, don't step up and cut rates. Okay. Then we had, and somebody I actually would listen to is Ken Griffin. Ken Griffin also stepped up and warned the Fed yesterday. Okay. I mean, look, these traders are, and listen, no two ways about it. Ken Griffin's a trader. He's, obviously built Citadel, but he's a trader. That guy actually sits, in the risk management seat every single day of that firm. But nevertheless, warned the Fed yesterday. And one of the reasons the warnings came out, every trader that I have talked to, and I spoke to a lot of people yesterday. We all looked at the move yesterday and you're just like, oh crap. Okay. Not that we actually just exploded to the upside, but you have to realize we exploded to the upside in the S&Ps, okay, on some really hostile, okay, numbers coming out of CPI. What really concerned one of my buddies actually that makes markets, and he makes markets predominantly in bonds, but what really concerned, what I would construe as one of the smartest people on the street, there was the collapse inside of gold, okay, crypto, other assets, okay. A few traders I talked to were very bothered yesterday by the fact that, and you got to think about this, and it's incredibly counterintuitive. And again, I'm trying to give you some insight into what the trading world is concerned about. I mean, what's the retail world concerned about right now? Well, obviously they're concerned about like, is this a bubble? Okay, you got to forget all that. The term bubble, okay, I know we've had a lot of discussion about it here at TheoTRADE, okay, because it makes for a good conversation. But what you got to be concerned about is when you get a hot CPI print, okay, and a hot CPI, all right, usually if you have inflation, inflation's coming back, what would you expect gold to do? Okay, there's a CPI print that came out and gold sold off, and not just a little bit. That was one of the bigger sell-offs that we've actually seen as of late because gold has been a rip and a pure rip to the upside. So, a lot of people, don't worry about it, Don. It was just buy the rumor, sell the news. I'd agree with that. I would agree with that. Okay. The rumor was that inflation was going to be hot. Okay. They bought the rumor and sold into the news, quite possibly. That's fine. Okay. The problem you've got, okay, is you've also got dollar, all right, playing a pretty significant role, and went totally dormant yesterday. So I would have expected, and again, a lot of other traders would have expected much more movement in the dollar with a hot inflation print. Okay, there is bottom line over here. If you're listening to me, you're like, okay, so I'm a little confused. How does that drive markets? That is the right question. Okay, that's the right question. If you sit there and you're looking at this and you're like, I'm a little confused. Yeah, it makes sense. Gold sold off on more inflation. Even crypto sold off. Okay, risk assets rallied into it. Okay, there are some very unhealthy things going on in markets, and there's no question that whatever you might think about a rally, it's between overbought and oversold. I think you would probably stick with it's pretty overbought right now. Have some deep concerns though, not into the future. I'm talking today, tomorrow. Okay, there are so many aspects when you look at a tape, okay, like this, that are quote unquote, they're all over the place. Correlations that you look at for decades, there's none. Okay, this is where you actually look at like economics and you go, okay, people are talking about fundamentals and valuation. There isn't any. Okay, and this is where you better like grip your seat and hope that nothing too crazy happens. But you're about to be in a marketplace, okay, that's going to get all kinds of wild. This is normally you're turning the corner right now towards spring into the summer season, you're about to get volatile in here. There's just no question about it. Okay, you're going to see some pretty heavy volatility. Now, clearly, some of that volatility is going to play out in some of the big tech stocks. Okay, but you want to watch also stuff like Caterpillar in here. Obviously, I've taken some positions in Caterpillar. One of which I'm running a little bit short on time. Okay, with 9 days left, I need a monster move in here. The reason I'm looking at this is any of these risk assets. Okay, we're seeing constant rotations. Today, you're actually seeing a rotation out of some of the big tech stocks into things like Caterpillar. Okay, one of the reasons that we're seeing such, odd rotations in here, things like CPI coming in hot and all of a sudden gold sells off. Okay, there's nowhere to rotate to, and there's still a huge amount of capital out there. That doesn't necessarily mean, okay, doesn't necessarily mean that asset prices have to inflate, but there's constant capital rotations. There's capital looking for a home and they don't know where to put it. And it's one of the reasons you're seeing like one area inflate, another area deflate, a lot of market capitalization just moving back and forth. Okay. There's really, though, just a lot of danger in doing that because it's a game right now of, it's like musical chairs, especially for arbitrage, which arbitrage is, people classically think of arbitrage as like looking for inefficiencies, and it is, but capital rotations, arbitrage, everything is about money looking for a home. And it's moving from instance like, from Meta, we love it one day, we hate it the next. Money will move there, moving back towards, energy, moving towards Caterpillar every single day. Okay, we're looking for capital rotations, and it's musical chairs until the music actually stops. Okay, one of the things that we're just not seeing though is any degree of correlation right now. This actually, okay, just displays very cleanly you're in an advanced decline line that's positive today. Why? Because we're selling tech. And we're selling tech. Your advanced decline line that's positive with the S&P's down 8. It's because tech means more, and not a lot of tech, only about 3 or 4 tech companies mean more than anything, right? So you rotate out of a handful of stocks, okay, into a broad base, you get this positive advanced decline line with markets actually selling off. Be careful right now, okay, because you could have a day where ticks are incredibly strong. The advanced decline line could lead legitimately 90 products to the upside, and you could see a fast break to the downside. Okay, and it's all predicated on, as I said, a handful of stocks. Now, this doesn't necessarily mean that, today is the day. So I showed you implied volatility in Nvidia. You should definitely be concerned about that. Implied volatility skyrocketing with a stock skyrocketing. Okay, eventually it's not worth it anymore. It's nothing to do with valuation. It's nothing to do with a bubble. This is a trade. And eventually, okay, when you're doing a trade and that trade kind of just like came to fruition, that's it, trade's over, okay, it will start to unwind. And it's not going to unwind, it's not going to go quiet into the night. That trade will try to be persistent for a period of time. But if you take a look at Nvidia specifically today, okay, look at this. Right there, they're buying puts in Nvidia. They're buying puts, and the stock is being driven lower by buying puts. Now, have we seen it before? We have. The only question is that going to be consistent throughout the course of the day? All right. As I said, the trade that's been going on in Nvidia, it's not going to go quietly off into the night. There's not just going to be, there will be a day where it just boom and it's down like $100, no question about it. But initially, no one's throwing the towel in that easily. Okay, you're going to get tortured in a product like this. And some of the maybe short-term volatility that we're seeing in here could be a little bit of a warning shot. Again, I reiterate though, you're not even back. Just to give you like orientation, you constantly have to do this, especially when a product gets crazy. You go, holy crap, it's not even back to where it started the week. Okay, that's okay to say. Well, you're only $15 away from it now, but holy crap, it's not even back to where it started the week. So if you look at this and you go, oh, that's some harsh sell side activity. No, 5% would actually start some real selling in there. At that point, things could get crazy. Okay, you got to see a 5% move in Nvidia though, for me to even kind of bat an eye at that. It's plausible for today's trading activity in here. Again, we are finally buying puts and driving Nvidia lower by buying puts. So keep your head in the game a little bit today. And again, I'm being a little focused on this stock because clearly it's moving markets and there's going to be some possible trade opportunities here. I'm also looking at Tesla, and ironically, I'm looking at Tesla for the possibility of a pop back to the upside. All right, take a look at a longer term chart on Tesla. In fact, even 3 years. You have to go back like 3 years to really kind of feel where it's at. It's fairly wild. Okay, could it hit like 150? Absolutely, but you're in some pretty horrendous territory. And this is, again, people want to quantify like oversold, overbought. There you go. Sonara side of the gear, it's an oversold territory, yada, 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 who cares? But if you put it on a weekly chart, okay, oh, it's still oversold. Put it on a monthly chart, okay, let me guess, not oversold. It's kind of, again, it's oversold where the rest of the marketplace is overbought. By the way, the S&P is kind of continue here, a little bit of a progression to the downside, okay? Ticks are still actually, they're flat, but they're positive. The advanced decline line, ironically, has gotten better by about 2 or 3 stocks since the cash open, right? So rotations today, Meta, speaking of Meta, look at its auto expected move is screwed up this week. I don't know why. I don't know why, but Meta is definitely down on the week. The reason I'm bringing that into scope is to give you how strong Nvidia really is this week. It's got the whole marketplace. Okay, Microsoft, though, yesterday played a critical role. Microsoft cracking above the upper edge of its expected move. Upper edge of the expected move. Today, peaking and reverting right back down to the upper edge of expected move. That's where we're trading right now. Again, that one's really driving a lot of the market. The QQQ as a whole, okay, obviously this is the Nasdaq 100. The Nasdaq 100, interestingly enough, it's up on the week, but nominally up on the week. And then last but not least, we look at the SPX. The reason I'm looking at the SPX, caught a wild bid yesterday. Okay, the upper edge of the expected move is 5205. We're more than a hop, skip, and a jump away from that. But now what's 40 S&P handles amongst friends? So you're about 40 handles right now. Just to give you a feel, you're just about halfway. Right here, you're about halfway between where we started the week and the upper edge of the expected move, a little more than halfway. Okay, the expected move this week is just over $80, and that's worth noting. That's a big number associated with this. Okay, there's not nearly as much implied volatility packed into today. Today's expected move, just so everybody's clear, the expected move for today is 23.65, and again, I'll write it up here. It's 23.65 is today's expected move. We're nowhere near that right now. Yesterday, we smashed through expected moves to the upside. We'll see what actually comes out of today's trade. So my concern, okay, are these rotations. And my concern is a very simple one, and I'll put it into context. We rotate, okay? We rotate. It's musical chairs. And this is something that Jeff Bierman is probably, better at explaining where the rotations are actually moving to than am I, because this is the kind of trade that he looks at. But the capital rotations are really prevalent. And again, what I want to stress in here is that you could see days where, like, the S&Ps, just give you an example, they could be down 40, they could be down 50 in the S&Ps, yet you could still have financials positive. The reason that you want to have a little concern right now, it's not about overbought, oversold. Capital rotations, okay, will persist until they stop. And that's why I call it this musical chairs. When I say they persist until they stop, that sounds ridiculous. Okay, look, the capital rotations are things like seeing a positive advanced decline line with markets down. Okay, the capital rotations, which you have to kind of garner from this and watch out for. You can get the S&Ps down 40 handles with a positive advanced decline line, and then all of the sudden, the financials start to correlate and they drop with tech. Okay, where you're going to need to be concerned in this marketplace, to the upside or the downside, I don't care. Yesterday to the upside, there was no correlation. There was no correlation. Where you need to be concerned right now is because there is no correlation. You're making large moves in a marketplace and there's no correlation. Okay. We are clearly, you're seeing actually, rotations play out kind of in real time over here. Energy just, mellowed out for just a moment. You can see the financials kind of mellowing out for a moment. Meanwhile, there's still some more sell side going on. They're really beating up Meta, okay, right now. Nvidia, okay, this is more dynamic hedging than it is catching a bid. When I say dynamic hedging, you go down, you bounce, okay, you go down, you bounce. There's still, again, some heavy rotating going on. Rotate! And you rotate until, again, as I said, the music kind of stops. This is, picking out individual sectors. But when you have a positive advanced decline line with the market down, like I can just look at that and tell you right now, that means energy and financials are positive. That's the only thing that can give you a positive advanced decline line with the market down. Energy and financials are positive with tech down, period. That's it. That's all you have to know, okay? You could see a day where there were 80 decliners and the market could be up huge as long as Nvidia was up. Now, let me describe one other aspect to you of Nvidia, and then we're going to start to look and break down a couple of trades, individual products, right? Sorry, I'm just reading over here. Okay, I need coffee. It's wearing off already, man. So there's a question that has come up quite a bit, and I'm going to explain it like this. How can one stock drive an entire market? Okay, and let's say it's one or two stocks, but let's use Nvidia as our prime example. Okay, how can one stock drive an entire marketplace? I think that it's imperative at this point to understand, okay, the market, all right, and understand its structure and how one stock really can drive. And then, by the way, this is not an opinion, okay? It's not up for debate. One stock can drive a market. That's the statement. I want to make that very, very clear. This is not, again, like, this is the stock that's driving markets. And that's, as I said, not really an opinion piece. That is a outright fact when you have one stock with a market cap of this magnitude, and market cap being right here, 2.2 trillion. By the way, as I said, we're catching up to Apple. Apple's about 2.6 trillion, but you realize Nvidia again, 30-day vol, 70%. Okay, Apple 30-day vol, wait for it, 23%. What do you think about Nvidia now? Because Nvidia is not trading like a $2 trillion product if you volatility adjusted. And Nvidia is what? 3 times more powerful, okay, than Apple. Now, Microsoft's got a little bit more vol at times, but not right now. It's also a 22% vol. Okay, it's the biggest monkey on the block with a $3 trillion. But again, all of it pales in comparison to a 70% implied volatility with a $2.2 trillion market cap. So I'll explain something to you. Okay, close up this left side bar. Okay, let me show you exactly how this works. First of all, okay, the trade often starts, okay, and the one that's really been driving markets often starts in an option chain. So the option marketplace is literally a cart that leads the horse. What you're seeing right now, okay, is massive, okay, buying of calls. And I've explained this like ad nauseum. You buy calls, okay? A market making firm is going to sell them to you. By the way, we're breaking lows right now in Nasdaq on Nvidia. You're buying calls. Your buying calls produces positive delta. That means you want the stock to go up. Okay. Now, buying of calls is not just you. It's proprietary trading firms. It's hedge funds. Okay. This is like almost like a coordinated effort. Everybody's like, let's buy calls. Okay. They don't get together like that, but one algorithm sparks another algorithm. All of a sudden, there's massive buying of calls. And we're going to put the word over here, massive. Okay. It's not retail. It's not, the kids sitting down in the basement. They're like, Mommy, meatloaf. Okay. And then buying more calls. That's not the way it works anymore. Okay. There's algorithms belonging to big proprietary trading firms. Anyway, they buy calls. And the buying of calls, literally, this is what generates the entire marketplace to go up. And you go, it's ridiculous. You can't move a whole marketplace because some, kid in a basement is buying calls. You're right. But can you move a marketplace if you have proprietary trading firms and hedge funds in on it? Hell yeah. So the market maker, like a Citadel, is out there selling calls. The market makers don't give a damn. They're going to sell calls. It's going to produce negative delta. And after it produces negative delta, they want to balance their equation. So what do? They add positive delta. How do they add positive delta? Okay, by coming in here and buying shares of stock. Okay, they buy stock, and buying stock does what to the stock? Drives the stock higher. The higher the stock goes, more people buy calls. If you buy more calls, you have to hedge the original negative delta. If you hedge the original negative delta, you got to buy more stock. And then it actually produces buying more calls. If you buy more calls, you have to buy more stock. And before you know it, we go into a cyclical rotation to the upside. Everybody good on that one? If you understand. If you understand that notion that buying calls causes anybody in the market making side, it's Citadel, it's Virtue, okay? It's the CRTs out there, firms that people have never even heard, Peak Six, all of them are doing the exact same thing. I have buddies that work at all these firms too. And they're all talking about the exact same trade. What do? We buy calls, sir. We are good at it. Okay. If we understand that notion, behind the buying of calls, well, buying calls produces a stock that starts to elevate. Let's see what elevation looks like. Elevation looks like, holy crap, it's up 85% on a year-to-date basis. Okay, but wait, there's more. So the stock starts to get wicked to the upside. But if you're familiar with, right, only Joyce gets it. All right, hold on. Oh yeah, it's good stuff. Okay, but as you start to move Nvidia up, does Nvidia belong to the S&P 500? Why, yes, it does. It does belong to the S&P 500. Is it market cap weighted? Yes, it is. And this is where the novice says, well, if it wasn't market cap weighted, the S&Ps would still be up. I know. Thank you very much, Captain Obvious, because Nvidia is going to lift the whole marketplace. So what's going on is Nvidia lifts, okay? It actually sparks back, boom, to where? S&P 500. So the S&P 500 starts to lift. Why? If you move this stock up, you have to move the basket up. What's the basket? The S&P 500. Well, what do you mean? Well, look, there's 500 stocks in here, Don. Yeah. And if you actually added up 300 out of the 500, it still wouldn't equal the market cap of Nvidia. There's 300 stocks in the S&P 500. It might be more than that. I haven't done the math in a long time. There's at least 300 stocks that still don't equal, okay, $2 trillion, right? So it's the most important monkey on the block. So if you move Nvidia up, you move the S&P 500 up, and you go, how do you do that? Well, trading firms, as Nvidia moves up, what they actually do is they ARB, okay, ARB, okay, it's arbitrage. They ARB against the S&Ps. They ARB against the Nasdaq. Okay, they ARB against the entire basket of the S&P. What do they use? They use ES. Okay, that's supposed to be ES. They'll actually trade S&P. They'll trade SPX. They'll trade spiders. Okay, which actually leads to trades in the VIX. Are you seeing how everything kind of proliferates? The arbitrage has to be there. Why does the arbitrage have to be there? This is a basket. Okay, there are many like it, but this one is mine. No, this basket in the S&P, I'm using the S&P 100. It's easier to understand this. But in the S&P 100, forget about the advanced decline line. Who cares? If Nvidia moves up, and Nvidia is one of the biggest market caps, okay, let's say the total market cap of this is what, right? In fact, I can tell you the exact market cap of it. So I'm actually going to show you the market cap here momentarily. All right, market capitalization. Oh, here you go, 43 trillion. So this is a product, the S&P 500, okay? So the S&P 500 equals, okay, 43.4 trillion right now. Okay. You're like, oh, whatever, man. There's only 2 trillion. Okay. Yes. But if you can move one product with a $2 trillion market cap, it'll move the entire basket. And that's where things start to get wild. So as you actually lift 2 trillion in market cap, it actually sparks the entire basket to effectively move with it. Okay. And then you start to proliferate from there. So the arguments about like valuation and so forth, it's dead to me. It's totally dead to me because it means nothing. Who cares about valuation? It's just, why would you even think about that? Well, the one thing that people don't get about this business, and they never, people don't like to think this way, but what if you can make money and not give two beeps about market direction? Because that's the whole trading world. No one gives a damn what the S&Ps are doing, but they get concerned after they do a trade and they go, oh crap. It's almost like, a bad side effect. They're taking like some drug and all of a sudden you're like, there's been a side effect. I currently have a third eyeball under my armpit. It's good. I can see what's going on in my shirt, but other than that, it's a very strange business when you're on the market making side of this, when you're on the proprietary trading side. Everything you do on the prop side, no one gives a damn. Like there's trading firms that are like, what do you think about the PE ratio? Okay. But what's really going on in the firms like where they have closed doors and you don't get to see what's going on in there, like nobody from like the depths of a proprietary trading firm that's making money comes out and talks. Okay. But the truth is what they're doing has nothing to do with the market as a whole. Okay. If you can influence a little bit of Nvidia and drive the rest of the marketplace and produce, okay, it's like creating your own arbitrage, then they just lean into it. Lean into it basically means, hey, if it works with $50 million, tomorrow we'll do it with 100 million. If it works with 100 million, don't worry, we'll have 30 billion thrown at that in the next couple of days. Okay. That's how trading really works. No one gives a damn about what the markets do. Okay. All they're doing is, and what I'm looking at in S&P 100, this is called stat arb or statistical arbitrage, where you're actually moving a basket. The concern right now, though, is the basket, it stopped moving efficiently. The basket is all kinds of screwed up because now there's these capital rotations going on and everybody's just like, it's like jumping on one side of the boat. Okay. You jump on one side of the boat and guess what? The boat goes higher on one side and then all of a sudden they'll jump to the next side of the boat. The boat will go lower. But right now we're caught in this like crossfire of upward momentum. And you're at this, what I think is a little bit of a wild tipping point. That doesn't necessarily constitute that we have to go down and go down big. I don't want to be misunderstood in that. Okay. But you're seeing something that you don't typically see. Okay. You're seeing people from the industry that really understand this stuff. They're coming out now. Now they're concerned that they may have done some and inflicted a little bit of pain in the marketplace. And they're starting to talk to like, the Fed better not cut rates, anytime soon. That is a warning shot being fired because they're telling you that the market's heating up. Okay. Got to read between the lines. They're telling you the market's actually heating up. The market going up is incredibly inflationary. Incredibly inflationary. All right. You want to spark inflation, put a market to the upside. Everybody feels like they have money. They go out and continue to spend. And that would be the disconcerting area. Again, when this starts to unravel is when we start seeing higher degrees of correlation. When there's 90 stocks trading on one side, okay, 90-10, but the whole market, like the big tech stocks, start moving with financials, start moving with, energy, then there's going to be cause for concern. But one of the things that I want to bring to you, though, is just that it's just the understanding, okay, that a market going higher or going lower, there's so much more going on. And it is, in fact, sparked, okay, by one underlying. All right. And that one underlying, there's no if, and, or but about this. If Nvidia starts to unravel, it'll pull everything down with it. You go, well, but they're going to rotate. It's like dance monkey. They're going to rotate until they can dance no more. Okay. That's that, kind of game that's played. And right now we're in rotation game. Okay. So we're through just the parabolic move. And that's, again, we could get, when I say parabolic move, that's a parabolic move. Okay. This week and last week, there's evidence that we're through that. Right now, again, we're seeing the rotation game, maybe stagnating a little bit. CPI comes out. There's a really odd move in markets after CPI. I'm sorry, but you want to see odd? Just look at yesterday. Markets explode higher with a CPI that's incredibly strong. Again, it's inflationary that CPI is hot, right? And then inflationary that the marketplace is up on top of it. So with your inflation, you get a side order of inflation. And now we're seeing some weird rotations the day after. Okay. That doesn't mean, again, that we're going to get all kinds of wicked overnight. This rotation can go on for quite some time. What you want to try to do, especially for those of you that trade intraday, try to hop on board some of the rotations. Like right now, financials are strong. Okay. If financials start, and again, think about this, if financials start to just bleed just a little bit lower, okay, it must mean that maybe some of the capital's coming back towards tech. So you can start to kind of jump on some of the rotations yourself, again, on an intraday basis. Now, there's days I come in here and come out swinging with trades, and there's days where I'll explain a little bit more, because I can tell you right now, one of the things, look at energy, that's crazy. One of the things you're seeing right now is one of these days where, okay, we're shifting gears. We're clearly starting to shift gears in markets. It's more appropriate that we understand that we're shifting gears right now than just try to jump on, trade after trade. All right. We're shifting gears though in this marketplace in a hurry. Speaking of shifting gears, just want to show you a couple of products. Amazon right now on the bid, Google back on the bid. Google's been interesting. No one's wanted to buy this all year. Okay. No one's wanted to buy it. Well, bid up at literally since the end of January. Okay, nobody likes me, and all of a sudden now they're rotating back into it. It's part of the rotation game, so just be aware. Amazon, nobody really rotated away from this, very near highs. You've actually got Microsoft. Microsoft is very interesting because it's been part of the rotation game now for months. Okay, and it's clearly in play. So what's driving markets? One of the big drivers obviously is Meta, and the preeminent driver, of course, is none other than Nvidia. So at a point like this is where people say, well, Don, there's other stuff that's cracking into new highs like Caterpillar. I would agree. Okay, Caterpillar is definitely in play. It's in play to the upside right now. Okay, this is one though that also is kind of stagnated to some degree today, making a more substantial move. Okay, Costco was actually one of the players until the most recent earnings announcement. Okay, dropped now down about 1%. Okay, take a look at some of the retailers. Okay, would you believe if I just covered this up, and I've been saying this for like the last week. Okay, if I covered this up and this up, would you know that that's Walmart? Okay, I'm not trying to be facetious. I'm dead serious. Okay, you look at this and you think that looks like some crazy tech stock. Now, granted, it's only up 15%. It's Walmart. Okay, if you know anything about Walmart and you've looked back, okay, over many years, this is by far and away the biggest move that Walmart has ever made in a short period of time. Okay, I can tell you the whole history of this thing. This thing was a $50 stock with a nail in its foot for decade. There it is. $50 stock. It's split adjusted, but this was a $50 stock with a nail in its foot for the better part of over a decade. It's almost 15 years and has gone absolutely parabolic recently. Okay, it's rotating, and capital right now looking for a home. They're using Walmart like they used to use bond markets. Okay, understand the one aspect about this, and why am I bringing up Walmart? Its beta is 0.27 historically. Okay, do you know what that means? Do you have any idea? And again, today I'm pointing out what I would term as like, it's just anomaly after anomaly. And I started with today, a really confusing look at the tape and like, what the hell does that mean? Like, oh, gold goes down on a day CPI comes out. Well, here's another one. That is a 0.21, okay, what we term beta. That means that this is only supposed to move 0.2%, okay, with a 1% move in S&P 500, okay? So a beta of like we'll call it 0.22%. A beta of 0.22% in beta is percentage terms, means every 1% move in the S&Ps, this stock is supposed to move by what? Okay, 0.2%. But you want some ironic crap going on? Look at the year to date. Hold on, year to date, son of a, it's up 15%. Look at the year to date in the spiders, it's up about 9%. Okay. Is Walmart following its trend of beta this year? Oh, hell no. Walmart looks like, it's like Dell Computers or something. I don't know why I picked up Dell in that one, but sure. What the hell? Okay. What the hell? Buy a Dell. It looks like when I say Dell Computers, you couldn't tell it apart from some of the tech stocks out there. Okay. Everywhere you look on the screen. And again, the reason I'm bringing this up, if I hear one more person or get one more freaking email about valuations and PE ratios, I'm going to lose it, because none of it matters when you actually have this call buying trade underway. And yes, a lot of it relates back. Nvidia is not the only aspect worth discussing in here. There's clearly other stocks that are getting that kind of activity. That's why I was pointing out stuff like Caterpillar. Caterpillar, though, really is interesting to me, because the options activity is not parabolic in here. It's not a lot of movers. There's some kind of trade literally moving Caterpillar. And this is one I have to look more into. Moreover, you are seeing a lot of that same activity, though, again, in rotations today, specific to the financials. All right. I like what Eric said in here. Don is reading emails, going to Bierman. You know what? I go into the queue. I read almost everything that comes in. That may sound crazy, but I even see it a lot of the times before Brian Aponte. Okay. ADD is a very bad thing, unless, of course, you're in this business, in which case, you're like, it has helped. Okay. Don't take the medication for ADD. It helps. All right. The medication is coffee. Let me sending the email now. It's not even the Canadian engineers anymore. Okay. It's not even the Canadian engineers, eh? I'm just looking at what's going on price action wise in here. Yeah, I'm still short some friggin' stock in there. Sucks. Okay. All right. Let me actually explain a couple of other things in here. So individual stocks, I do have a trade or two to talk about. And there's one thing I have got to get to, and that's the roll. Let's cut the crap here for a second and talk about the roll. Let's go into MES. Okay. Into MES. What does MES stand for? It's the micros. Okay. This is where I say very often, roll them if you got them. I am short 3 MES. And let me tell you, being short 3 MES, I'm just lucky I'm not short 5 MES. Okay. In the MES, and what I'm going to explain over here is absolutely critically important. It's critically important if you ever carried any of these futures. Come in here, right click. This is the exact same logic on the Tasty platform. Okay. Come over here to create rolling order. And it's going to bring up a futures spread. Okay. What a roll happens to be, and I'm going to show you what the roll is. What the roll is a lot of people, when they move futures contracts, okay, when they move futures contracts from March, okay, to June, in this case, they would buy, okay, they buy or sell in March, and then they buy or sell in June. So they would actually trade this market and then trade this market. That's absolutely unequivocally wrong. What very few people understand is that there is a marketplace to roll, meaning that this is done under one transaction. I'm going to buy back. By the way, I am short. And I want to make, it's kind of confusing because I'm short in March. I'm short 3 in March. I want to buy those back and then be short 3 in June, right? So what I need to do is in one transaction, buy back March, sell June. And that market in here is so much tighter than trading this and then this, right? So the give up is substantially less in the spread, okay? But here's a market of 63.65 at 63.75, okay? And I'm gonna come in here right in the middle of the market. I'm actually gonna work all three, and you're gonna see me right now move the market. There I am, I'm filled. They just filled me in the middle of the marketplace. No if, and, or, but about that. So I just filled 3. what did I actually do? Rolled. Okay, I rolled. And it's very confusing to people when they say, what do you mean you rolled? Okay, I rolled. Okay, I rolled and it was spectacular. I moved from the March expiration to the June expiration. Okay, and this is what we call a hard delta, meaning that it's like trading stock, except the stock expires like quarterly. So you have to roll your position forward. Okay. The next one I'm going to do is going to be in the Nasdaq. I am short 2 of the Nasdaq. Okay. Create rolling order in the Nasdaq, and it's critical that you roll, and you can roll up to and including tomorrow, but I suggest that you do it today because by tomorrow it's not too late. Just everybody knows. So anyway, the market in here is 246.60. Okay. At 246.80. All right. And I can come in here and I'll come in at 246.70, try to roll 2, and it's going to move this market. It's not going to fill me immediately. I'm going to work. I'm going to work at 246.70. Work it. So I'm a working fool at this point. So I'm working on the offer. And by the way, the way that the marketplace, I want to show you something. When I cancel the order, if I cancel the order, they move the market back. And people literally go, they're screwing with you. They're not screwing with me. At this point in time, I am the best bid. Watch, it's going to move it back. Okay, smooth. There it is. Oh, okay. It's a wonderful, magical place. But at this point in time, I am the best bid or best offer. And I'm trying to roll this, so I am the best offer at this point. Okay, if I canceled my order again, it would change pricing. All right, and the pricing just changed and moved away from me. That's okay. I'm going to be just fine. Okay, I'm going to be just fine in here. So the market's moved a little bit away from me. Okay, but then again, this is, an $18,000 product, and I'm fighting for a couple of pennies in here. Now, the roll is critical. So please, okay. Sir, I always knew there would be closet Pinky in the Brain fans in this chat room. Okay, that's awesome. Okay, Pinky in the Brain. I used to watch that in college. No, seriously, it was like you come out of a class. It's like 10 o'clock in the morning. It's like nap time for college. I remember watching Pinky in the Brain in college. It's good. It's good stuff. Okay, not just a fan. It's spectacular. All right. Sorry about this. I'm just reading back a little bit. Okay, the Nasdaq right now sitting near lows. Nothing critical going on. Nvidia looks like it's threatening to actually break some lows. But remember, 3% move. Okay, 3% move is nothing. But at the same time, I say a 3% move is nothing. It's 5% move just to get back to even on the week. But look at the damage it's still inflicting. Okay, to Nasdaq, which is nothing, right? 0.7%. Dawn yesterday was up, 200 and plus. Okay. Oh my gosh, somebody doesn't even know what Pinky in the Brain is. We got to get you guys updated on cartoons. Okay. Everything from South Park to Family Guy to Pinky in the Brain. Okay. You'll understand a lot more what's going on here. Or you'll understand that, okay, got a lot of issues. Let us continue on. The only stocks really moving today, there's some individual stocks. Jeff Bierman, I'm sure will talk to you about this, like Dollar Tree. No one is ever going there ever again. Actually, their problem was they're taking a loss and making it up in volume. This is not that is not desirable for a stock down some 15%. That's hostile. I keep pointing out, by the way, I read some of the reports out of Dollar Tree, its earnings, obviously, and they have some issues. Okay, no question about that. And getting merchandise is one of their issues. But I keep pointing out the reason I'm actually bringing up Dollar Tree, there are issues going on in retailers. You just like in Walmart though, you just simply don't see it. Okay, in Target, Target had the worst quarter they had in like 15 years, and the stock exploded to the upside because they made more money, in decreasing sales. They just made more money in the profit. Like, oh, we raised prices. Anyway, the stock's been slipping a little bit after it. I really do watch the retailers because the retailers, I think that they're going to feel it first. I also watch stuff like Starbucks. I watch Starbucks because there are discretionary aspects, okay, of your daily diet that you could do without. Starbucks is one of those. Okay, McDonald's is like the last one. No, nothing impacts like McDonald's. McDonald's being felt a little bit today, though. Interesting. It's actually a big move in McDonald's. Nevertheless, I watch some of the retailers, watch stuff like Starbucks to get a feel for, economic conditions. Because I'll be honest with you, I don't think that some of the economic data coming out has any bearing anymore in markets. There was a trade I was looking for today, and I just want to bring it to fruition. Okay, I'm not going to execute into this today. I am shopping a trade. Okay, I know that Tesla has earnings coming out. Okay, on the 17th of April. So if I trade, it's got to be less than the 17th of April. So 30 days would be the max. The trade I am shopping for was a $5 wide call spread, but I want to let the stock play out a little bit more. The skew inside of Tesla, okay, is an interesting one because it still slightly bends to the upside, which is wild. But the trade is going for about 248 debit. You would need a fairly significant bounce back. When I say significant, let me be clear about that. The stock basically has to get above 175, stay above 175 for the next 30 days. I think it's a little bit early right now to hop into it. I want to let the stock actually play out for another day or two. Okay. I'm a little surprised at the sell side activity, specifically inside of Tesla today. So this is a trade I had teed up that I've actually decided to hold off on placing. Okay. As I said, there's days I come in here and I come out, guns ablazing and I want to trade. There's days like this. What I see in today's marketplace, there's change underway. Okay. We're rotating right now away from tech. Okay. Back into like Russell. If you hadn't saw Russell yesterday, okay, Mr. Russell was actually down yesterday. So I'll look at IWM, is easier to actually interpret. The Russell was down yesterday, has a huge bid back under it. Okay, so the rotation game kind of continues. All I'm looking for over here is just a little bit of a better feel, and I'll start to kind of fire out a few more trades. In-out spreads, though, are appetizing at this point because all you have to do is hop on, okay, where I think the next rotation is going to come. I look at stuff like Walmart. Okay, I've gotten beaten up in Walmart before, but rotation out of Walmart, plausible. Okay, rotation back into, for instance, Tesla, very, very plausible. Okay, I'm not touching Costco right now. This thing is, it's already been beaten up a little bit. That's a little bit of a tougher, I think tougher marketplace. What I would look for, though, specifically for the remainder of today, is the sell side activity going to really start to kick into high gear specific to Nvidia. It's a sad day where you have to talk about like one individual stock like there's nothing else going on. But Nvidia is clearly the key over here because if Nvidia takes on more water, it's actually going to cause the S&Ps to start to see some sell side activity. The S&Ps, again, they have a $23 expected move. Actual move, there isn't one. It's moved $4 today. There's a nothing move in here. So with that being said, we got to sit back and again, okay, play a little bit more. Hey, I filled in the futures role. Okay, we got to sit back, play a little bit more of the game of rotation and wait. I put a catapult on the MES versus Microsoft for those of you that missed it. That catapult trade is, this is the way it's supposed to work. The MES, okay, versus Microsoft. Even with the big rally up, not losing anything in the MES, okay? Not losing anything in the MES, making a very small amount in Microsoft, okay? We'll see how this one plays in days to come. That Microsoft trade, though, has got 65 days left. For those of you that don't know this in the catapults, I'm doing about a trade a week right now. And I'm actually going to use a separate Tasty Trade account specifically for catapult. I'm just going to stack out trade after trade in there. We'll sit tight with TheoTHEO right now. Spread tracker. Look, I got stuff on Caterpillar and Wells Fargo. And I think more disturbingly than anything is Wells Fargo, which continues, okay, to have a wild bid back under it. Look at this from an auto expected move point of view, okay? Week in and week out. You want to see something record breaking? Got 1, got 2, 3, 4. This be the fifth consecutive week of hitting the upper edge of the expected move. You need a new word for overbought because it just doesn't necessarily resonate with something like Wells. Nvidia, we are definitely on Nvidia watch 2024. This is a stock, though, that may have already actually taken its hit early in the day. Could be rotations back into Nvidia as the day goes on. I do actually running late today. I have to turn it over to Professor Jeff Bierman. Again, Nvidia, it's anybody's guess as to what this is going to look like even an hour from now. But look for a 5% move to be the starting of what would be some sell side activity. Other than that, don't worry about it. I mean, look, it's got the Nasdaq under pressure. Look for a 5% move. The reason I keep saying 5% move, it actually has a 5% move. It could spark, okay, more correlation to kick in. I want to point something out. The advanced decline line has actually gotten better, okay, with the marketplace not appreciating. It's getting interesting out there. Jeff Bierman's coming on right now, spreading the wealth, upping the ante on volatility band indicators, part 3. I also wanted to make mention, we're going to do an at the close today. It's going to be Todd Sweet and Brandon Chapman. For those of you that don't know Todd actually runs support, okay, for STX options. Okay, Todd actually runs support. Todd's also a career market maker, and it's going to be interesting. I'm going to have Brandon kind of interview Todd a little bit about the making of markets. And back in the day, if you guys are interested in the inside workings of a market maker, okay, we're going to look at what comprises the sausage later today. So tune into the at the close. I think you guys will enjoy it. Stay tuned. Jeff Bierman is coming on right now.